The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 19th. Magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. Just send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 434 points, 24,976 is the print. S&P's off 45 points, 1 7/10% to the downside. NASDAQ 100 off 3%. That's 207 points to the downside. Brussels off 25, semis down 35. It is mean and red across the board for the U.S. indices out here. Spot volatility, it's up 13%. You know what that means if it's an end-of-day reading greater than 10%. Right now, she's trading out at 20.55 above all of its forward-looking futures contracts. Gold's up $2, 12.24 is the print. I believe that's headed to about 12.33-ish or so. You got light sweet crude up a penny. 9 cents out there, I should say. Silver is up 1 penny. Lead the charge to the upside. That is not an ETF. It's AutoZone up $6. Resolute Energy up nearly 5. Cracker Barrel up 4. Tesla, Cracker Barrel. You like Cracker Barrel? Yeah, everybody likes Cracker Barrel, and it is pertinent this time of the year. Hey, to the downside, plenty to choose from dollar-wise. You've got Amazon off 76, that's nearly 5%. You've got Google down 38, that's 4%. Intuitive Surgical down 31, that's 6%. So plenty to look at. Of course, I want to look at what you want to look at. Although I'm having some major system problems here. So I'm just hamstrung with just my e-signal charts out here. I have been working like a dog or a cat or just working hard for the last hour and a half trying to get my system up and running. But at this stage here, to no avail. But that's okay. We're good. We can go ahead and utilize this set of tools that we've got to figure out what the markets are doing or what they are not doing. So let's begin by taking a look at the cash indices out here. I didn't see any request before we got started, but let's take a look at the ES. Let's take a look at all 4 equity futures contracts. Try to get a feel for what they're doing. In the left-hand side, what you're looking at is the S&P futures, the ES mini. Right now, it's trading out at 26.90. If you take a look at those green and blue horizontal bars out there. I apologize. My eyes floating to my phone because of tech support and stuff like that, but it's neither here nor there. Here's what the ES Mini is doing. It is testing the bottom of its daily profile, which is at about 26.95. The bottom of the weekly profile, which did find support 3 days ago, is down at 26.71. A close below 26.9. Well, let me give you the right number out here. I may have given you the wrong number. No, I didn't. 26.95. A close below 26.95.50 out here, 50 cent, would likely take you to about the 26.71 area. That's the message of the ES. The NQ is a whole different animal right now because price is trading below the bottom of a daily, below the bottom of a weekly, and if it closes below 67.0650 out there, that's not good news. What the news would then say is price is likely to at least go test the low from the trading day of October 29th. That low out there is 60, I'll get it for you, 65.8050. If it closes back above 67.0650, then what today was, just like on Thursday, is a test of support. But right now, support inside the NQ has been broken. Inside the Dow, what you'll see out here, really just its daily profiles. Its weekly profiles, the green horizontal lines are way above price, and so they're really not being factored into identifying levels of support. We're trading at 24,980. Support is 24,967. It's been tested. So we know the NQ is below support. The ES below daily. The YM right at the daily level out here. So if the markets are going to find support, it's kind of like right around now. Now, it doesn't have to be 1:12 in the afternoon. I wish I had my other system because we could take a look to see if there's any short-term Rhodes momentum indicator signals. We don't, so that means we've got to go with what we have here. If the Dow Equity Futures contract at the end of today's session closed below 24,967, then at a minimum, you're going to see, or you should see, a run down to the November 15th low. That's 24,782. If we look to the Russell 2000 for help, well, from a profile standpoint, there is none. Prices below the daily, prices below the weekly. The key number to be looking at is 1512.18 out here. That is the bottom of its weekly profile. Okay, so we know that. Has anything here changed just yet? Now, what do I mean by changed just yet? And the answer is no. Well, define what just yet is. Just yet is that the markets made a nice solid bottom on the trading session of October 29th. We know that if I had my other system, what I would do right now is I would bring over that chart. We would take a look at the last quarter century of those Rhodes momentum indicator bottoms out there, and we would know that this was a significant bottom if we're still in a bull market. A very significant bottom. Those lows have not been tested. They have not been taken out. Of course, what you and I were looking at when we looked at that, and we have looked at that, was inside the Dow. I have not run the same thing for the NASDAQ, but we did run it for the Dow. I believe I also took a look at it for the S&P 500. In the case of each of these indices out here, price is not broken below, has not even tested the low of that October 29th level. That is a key area to be watching. Certainly the NQ is going to be a key because it's the one that is nearest, as we speak right now, to being down towards that level. So that's where we would be looking. That's where I would be looking. Okay, that's the indices. We get back from this first breakout here. I'll see if my support team has got anything else for me to try. And if not, we'll just keep moseying along. Of course, I'll check my emails. Steve@TFNN.com. You can always give us a call live at 877-927-6648. Dow is trading down 424. S&P's off 45. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow off about 450 right now. Let's go to our first question. This coming in from James. James writes I'm in Amazon. I see we're testing recent low. What do you think? Should you still hold it? So let's go take a look at Amazon. Amazon trading down $84 with 4.5 million shares. Let's go to our 3 time frame charts out here. Oh, we've got Apple up on the screen too. And so that too is testing its previous low. That's from November 14th. Now in Apple's case, it did 60 million shares. Today so far, you're at 25 million. You're almost 4 hours into it. So that would be about so we've got 4 hours that we've done. So we're doing about a little over 6 million shares an hour as we speak, times 6, 36, to 40, say about 40 million. So in my mind, I'm just doing this math in my mind. So James, we're testing the swing point from November 14th on what appears to be lighter volume in the case of Apple, just simply because it's a higher weighting inside the NDX 100. But it will need to close above 185.93 or 186.26 right now. So close above that, and again, do that with lighter volume than the 60 million shares. In the case of Amazon, let's go see what it is testing. There's a swing point down there. So it's not all the way down below the swing point, James. That swing point is October 30th. Well, kind of interesting, right? Makes sense. We talked about how in the case of the Dow, not the NASDAQ, well, in all the indices, but the Dow gave the best signal, which is that it formed a nice solid bottom on October 29th, 30th out here. So now what we're taking a look at is Amazon into the 30th, which did 12.5 million shares. Now, 4.5 million shares is the number. We just divide that by 4. It's a little over a million, right? So let's call it 1.2 million to round times 6.5 hours. That's going to be, what, 13.5 maybe, something like that. Well, that is pushing. No, what did I just do there? Did I say 13? A low times 6 hours, like around 8 million. So it too is testing the volume from October 30th on lighter volume. What it would need to do, James, in order to reject that swing point would be to close over the high 1540.99. What it is also doing right now, it's pulled back into the bottom of the daily box. That daily box is bullish in structure. That's the left-hand panel of the screen that you and I are looking at. If price closes below that, and it closes really below the low of October 30th, 1476, then what you're likely looking at is a move into about the 1422 level. That is the bottom of its monthly profile out there. And so that would be a level that I would look at for support. But right now, you've got Amazon pulling back with some light volume into a potential level of support, bottom of its daily profile. You'd need to see it close again above 1540.99 in order to have a rejection out there. So I hope that helps you out. Let's take a look at what Microsoft is doing, just for the heck of it, just to try to get a feel for what the NDX is doing out there, right? So the top 5, maybe somebody in the den knows what they are. I believe it's got to be, well, I don't have to believe anything. I just really have to look it up. I can do that. Oh, it's on this other screen out here. So what do I put? The NDX 100 weightings. I just have to spell it correctly. And it should really pop up on my screen. Will this do it for me? Weightings, NDX, global indices. Oh, man. No, thanks. Don't show me this again. So you've... Well, that's not it. Huh. Okay, well, as much as I'd like to do that, this is giving it to me by name out here. So... okay, I can't do that, but let's take a look at Microsoft, because Microsoft is trading down into the October 30th as well, and October 30th has got 63 million. You're at 22 million. Of course, it is a holiday week. We all know that. So, you know, how do you measure the volume aspect? Look, let's just simply measure it out here. And James, what you'd be looking for here, you'd like to see all of these give you some type of sign of a bottom, the components, at least the weighted version. And the high out there is 104.38. So you really need to see it close above 104.38. Yes, it's coming back with light volume, but it can always go test the low. If it closes underneath 104.38, then it opens up the door for the 100.11 level out there. Maybe during the break, I'll figure out what the top 5 holdings are inside the NDX. But as long as we're taking a look at the NDX, what we should do is go take a look at the thank you, Polar. I'll have to try to pull it up on my screen here in a minute. What we should do is go take a look and see how the Qs are performing versus the equal weight. So what I've got out here is just looking for it. Divergent equal weight. Here we go. So we'll pull that up on my screen. And okay. So the very left-hand side, by the way, it's looking at the S&P, and the very right-hand side is looking at the NASDAQ. So right now, what we can see that the equal weighted is doing, let's go grab a yellow horizontal line, not red, yellow horizontal line. And what the equal weighted is doing is testing the swing point from November 12th, which was tested on November 14th, and we're trading just slightly below that. If it closes above 58.09, right now it's at 57.96, so it's not that far away. That could set up a divergent pattern, because what we can see here, and let's still use a yellow line, only this case here, this is going to be diagonal. It says yellow arrow. We're just going to go with yellow arrow, where this is making lower lows out here. Starting back from the same swing point. Let me just pull this down a bit. So you've got a potential. You don't have it yet, but you've got a potential divergence between the equal weight and the weighted ETF QQQ. Now, why is that important? The reason that's important is because it is the, and here's an example of one of those situations. Takes you back into 2017. Let me pull this in a little bit more like this. So back in 2017, between the dates of September 8th and September the 25th, what we saw the QQQs do was make a lower low on a closing basis. This is a line chart out here, but you saw a higher low inside the QQEW. QQ, that's the equal weight for the for the Qs out there, and divergences tend to resolve themselves in the direction of the equal weighted ETF. So James, just simply, I want to point that out to you because that's another thing, another tool for you to go ahead and use to make your decision about what it is you might want to do with regard to Amazon, or at least try and understand what the NDX 100 message might be. So I hope that helps you out. In the case of the S&P out here, you know, I don't really. Well, here I'll do the S&P for you. I think it's more the Nasdaq though. That's what you really want to take a look at right now. What we have going on inside the equal-weighted ETF for the S&P 500 RSP, it is testing the swing point from November 14th. 99.93 is what we need to close above, with the SPY closing below 270.20 to 268.77. This is Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So thanks to our man, our polar bear, David White, who just sent me the quick link, which is pretty easy. Should have gone there to begin with. The top 5 holdings inside the NDX 100 as of the close on Friday. You had Apple at 12%. I'm rounding up just a tad. Microsoft at 11%. Amazon at 10%. Google at 8.9%. And Facebook at a little over 4%. So about 45%, give or take, of the NDX 100 is made up of those 5 stocks out there, which is a good reason to go take a look at what the equal-weighted version of the NDX is doing. Another thing that you can do, or that I can do for you, but you can do it if you subscribe to it, is to take a look at the market breadth inside the NDX 100. So today and today's close is a daily time frame chart that you and I are looking at. Will be interesting. The reason why it will be interesting is we can see that the market breadth as of 1:31 p.m. in the afternoon, this covers all, I believe, 109 of the components inside the NDX 100, shows that we have 26 trading above the top of their box and 28 below the bottom of their box. So right now they're just simply kissing. And the question is, which one is telling the truth? Well, we won't know till the end of the trading session. If at the end of the trading session, you've got the more, and when I say above the box or below the bottom of the box, we just looked at profiles during that last segment. We looked at during the first segment as well. And if price is trading above the top of a box, which was resistance, then old resistance should become new support. And the simple interpretation would be the instrument is bullish. Maybe counter trend move. You got to factor in other things. Likewise, if price is trading below the bottom, such in this case here, 28 of the issues, so 27%. If you're trading below, you're trading below support. So support, old support, should become new resistance. And then directionally speaking, bearish would be the indicator. The predominant number of positions, equities, components, 48% of them are trading with inside the profile. So they're just kind of consolidating, so to speak, out here. That's what's going on inside the NASDAQ 100. We can also look at the S&P 500. Let's go do that. We can look at the daily time frame, and you can see that it's in a similar predicament. Are we going to see a bearish crossover today? Which could also just set up when we see we had the bullish crossover where the green line goes above the red line. That's on the trading session of November the 15th out there. And you do every now and then get these small periods of time where you get this back and forth. This occurred back here in August, around August 10th through August 16th, before you finally, or market breadth finally went ahead and gave you a clear signal. You had the same thing occurring between about May 25th, give or take, and June 1st, before you got a clear signal. But today, what we know right now as of 1:33, 131 components, so 26% of them trading above the top of their profile, 147, so that gives you another, 15, 16 instruments trading below the bottom of their profile, 29% there. Truly an end of the day reading out here. But hey, if the market finishes where we're at or less than where we're at, pretty decent, even though you don't have this tool, pretty decent indication that likely you have this little bearish crossover message. And that's what the market breadth tool would be sharing with both you and I. Speaking of market breadth out here, hey, I'm doing pretty good for just using one set of my tools. Well, of course, I'm patting myself on the back. That's kind of a silly thing to do. But if we take a look at it, a smooth transition, hey, as long as we're looking at market breadth, let's go see what the New York Stock Exchange has to say. And the New York Stock Exchange right now is at 134, is saying fumble or turnover. Turnover from the bulls to the bears, because the advanced decline data, or the advanced decline oscillator, is trading down below zero. The reading you see is minus 36. In a bullish configuration, what you would typically see is you would see that stay above the zero line, as we had been for the last, we've been above the zero line since the trading session of October 31st. Now, the way that this tool works is it's under, the day you have a crossover out there, just like it's in the, any touchdown gets reviewed, by headquarters. Instant replay, right? Well, basically, that's what happens. That's how you treat this indicator inside the New York Stock Exchange. One day, the first day above or below, you've got to go to instant replay. The problem is instant replay means you have to wait to the following session to see if there's follow through out there. So, for example, if today it finishes below zero, no reason right now to think that it won't. If it finishes below zero, but tomorrow it closes back above zero, it tells you that the sellers really never gain control. Now, the cool thing about how you can put that together with what goes on inside the market would be, where does the spot volatility index close at the end of the trading session? As we take a look at it right now, we have a one-day rate of change of 13.7%. You've got the spot volatility trading out at 20.6% out here. If it should have a one-day rate of change greater than 10%, well, you would just simply go ahead and add a blue arrow to the bar. And the reason you add a blue arrow to the bar is because what you typically see is either a stalling, a bounce, or a bottom that forms inside of the market out there. So you can kind of put that together, like James is putting together with taking a look at, hey, what's going on volume-wise inside Amazon, maybe Apple, maybe Microsoft, maybe Facebook, Google, to get 45% of the weighting inside of the NDX 100, or taking a look at the equal weight to try to put that together out here. But, you know, so if you're short, as an example, and the market finishes like this, where something along those lines, you've got a one-day rate of change greater than 10%, just don't be surprised to see equity futures trading higher. Could be overnight, could be at beginning around 9, 10 o'clock at night, could be 3 or 4 in the morning, could not be until, you know, 7 or 8 in the morning. But just anticipate it out there that that's what is likely to occur, because that's really what has happened so many times over the last many years in the past out there. What happens if it is not a 10% rate of change? Well, that's actually likely more bearish, depending on where price closes in relationship to the different profiles out there. So let me take a quick peek, see if anybody else has sent in a message out here or a request, so that we can take care of that. And the answer is no. I don't see anything inside the Tiger's Den. And I did get that email off to support, so that's good. So maybe I'm making progress there. So what should we go look at next? What would you like to look at next? Let's go take a look at, let's take a ride on the reading, and let's go read Goldilocks out here. So I had mentioned 1233, right? When we opened the show, we said gold was trading up, you know, $1 or something like that. Trading right now at the price point of $12.2540. The top of its daily profile is the center of its profile is $12.2590. So it's trading right now, from a daily perspective, where both buyers and sellers, bulls and bears, are most comfortable with price. If price can close above this, not by 10 cents, okay, but a couple of bucks, then the next level where price ought to head to inside of Goldilocks is up to $12.3380. And that is the top of its weekly profile, even spiking at $12.3840, the top of its daily profile. This is Steve Rhodes with TFNN. Dow's off 399, S&P 42. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Eddie writes in, he wants to know whether or not I use or if there's an accurate way to use the put-call ratio to identify bottoms out here specifically. But, if you can use it to identify bottoms, you should be able to use it to identify tops. So at this screen that we have right now, you've got the S&P in the upper screen, and down below you've got the put-call ratio out here. And the answer is I don't use it, Eddie. I know that you're basically the way that your question is framed is that basically you can't see how it's an accurate way of being able to identify a bottom. And so and all you really need to do when you put something like this on the screen, now there might be a threshold level, but if we take a look at the put call ratio on February 9th, it was at on a closing basis, it was at 136 out there. That was a bottom. If I look at the bottom it formed out here on April 2nd, it was just above 1.07. So, that was a bottom out here. If we take a look at the trading session of October 29th, it was above 133. But I think there's other tools. Well, I use other tools to help us identify bottoms, tops and bottoms out here. This is not one of them. So thanks for the question. I hope that answers your question. Probably doesn't. But what you should do is seek out somebody that does utilize this to identify bottoms, and they'll go ahead and give you the formula out there. I just simply don't have it. But thanks for writing in and asking about that. Treasury bonds kind of interesting out here. What Treasury bonds are doing is they've made that famous 100% move of a move. If we take a look at that, let me just turn off the profiles out here. Although what they're trying to do, they being T-bonds, futures, what they're trying to do is get up to 140 and 9/30 seconds. But if I go ahead and I turn, that's the top of the weekly profile out here. But if I turn those boxes off and we just simply go back and say, hey, what are Treasury bonds doing? One of the things we would look at is say, well, they found resistance out here. Resistance where? At the trading session of October 29th. If price closes over that, now this is Stevie's synthetic contract out here, but it still works. If price closes over that level, then what price should do, in essence, because it would be above resistance. Now, this is a natural resting point, but you don't know if it's just resting for the day or two, or whether it's just ready to take out that level. If it does take out that level, that's 139, 28, 30 seconds out there, then what we should do is we should see price head up into the top of that weekly profile, 140 and 09 out there. So that's what bonds are doing. That's what they're doing inside of the market, inside with as far as U.S. dollars is concerned. As far as the way that they are trading in euros, they're trading a tad lower. In yen, they're trading a tad lower. And in pound sterling, they're trading just a tad lower as well out here. So to see them stall right now in U.S. dollars, that's normal. That would be natural out here. And maybe they are going to pull back. I don't know the answer to that question. I would say that if they continue to trade lower inside the other currencies, and those are not buyers of the 30-year, and instead they're more likely sellers, or they're sitting there neutral. And so that's what T-bonds are doing out there. So, hey, any questions in the den other than if I got a signal on a short-term chart, and I don't have those charts up on my screen because that system isn't working. I need to get it working, but it's not working right now. AA, is that a question for me, possibly? From our favorite, it must be from our favorite polar bear out there. So let's go take a look at that out here. Yes. Okay, so let's go take a look at it. I love questions. Let's go see if we can answer the question, which is where is Alcoa headed to? So Alcoa taking out a prior swing point, below profiles on the daily, the weekly. And so I would say that Alcoa is headed to 3163 as its next test. 3163 is the bottom of its monthly profile. It's a bullish structured box. Suggests that it should have good support there at 3163. That's what the monthly time frame chart shows. If we take a look at the daily time frame chart out here, it's moving below its prior swing point from October 26. That has 4 million shares. You're doing with 2.3. It's doing it with light volume. Nonetheless, if price closes below that level, 3308, even though it's on light volume, a pretty good chance that 3163 becomes the old target Rooney, so to speak, out here. If we take a look at the weekly time frame, it is trading into a weekly swing point from June, which has 19 million shares. 2 million today. Who knows what it's going to be at the end of the week, but probably lighter volume because, you know, we're closed on Thursday. We've got a half day of trading on Friday. So pretty tough week to do your volume correlations out here. But nonetheless, as long as this is trading, this being Alcoa, AA is the ticker symbol, trading below 33.21, and it is right now because at 32.50. This says 29.55 could or should or would be the number out there. We'll go with 3163 is where Alcoa is likely headed to next out there. What's your take, Mr. Polar Bear? As you have your systems all up and running. I am a trader providing information with one hand, only one hand tied behind my back out there. And you can't even tell because both hands are like right here. So hopefully that helps you out with regard to at least Stevie's look inside of the marketplace. So what else should we look at out here? What else should we look at? I'm just kind of looking around here to see what we've got. What do we have that Stevie can share with anybody out here to assist them with what the market is doing that we haven't already done? Crude oil. How about crude oil? What's crude oil doing? So if we take a look at crude, we can see right now trade out at 56.92. The key level to be watching in the case of crude, and I think we looked at this on Friday. We'll look at Boeing too. Is 58.18. 58.18 is the brand new profile that formed on Friday. Its resistance at this stage. If price can get inside 58.18, you should anticipate that price will at least go test and get up to 60.75. 60.75 is the center of the box. Again, where both buyers and sellers are most comfortable with price. So you get inside the box, kind of think of it as the way that, Tom or maybe or David White might talk about getting inside the range. In this case here, the range would be the profile. And, of course, the top of that range would be 63.32. Can't make that call because this is really a equally distributed box, meaning the center is pretty much in the center out there. So neither buyers nor sellers really have advantage once price gets inside there. But right now we know 58.18 is the ceiling inside of Light Sweet Crude. There's no weekly profile out here. And so what we will then do is switch over and take a look at Boeing, and we'll really rip apart Boeing when we get back from this breakout here. But this thing headed lower. The question is where is Boeing headed to? And, I'd have to say, and we'll confirm this, but 311.17 is the number. So between 287 and 311 could be the number out there for Boeing. But maybe it's making an A to B equals CD to the downside, even on light volume. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back back, folks. So a couple of questions that have come in. We'll go back to Boeing here in a minute. This one, Bill was asking about just simply a correlation between light sweet crude, that's the center portion of my chart, and copper futures out here. The correlation, which is a 10-day average, is at the very bottom. There's a positive correlation, meaning they both move in the same direction when the bar is above zero, and they are moving opposite directions when the bars are below zero out here. So yes, there's some type of directional correlation out there. I don't know that I would necessarily use that as my trigger to get in or out. I'd rather use some other patterns out there. But to answer your question, Bill, yeah, there is some correlation. We've seen better correlations on other instruments. Going back to Boeing out here, Boeing, I changed over to the other one, DOCU. But let me take a look at Boeing here real quickly. There is an A to B equals CD to the downside on the daily time frame. And that daily, oh, man, it's not on my system. What the heck? Wow. I'm having a number of issues out here today. What is the deal? What is the deal? Jeez. I am confused as can be. So anyways, I would draw that A to B equals CD pattern here. My system's not going to let me do that. So we'll just simply have to fall back to the market profile. 287, but that was not the number. I'm going with the 309-ish area. Well, to be exact, I'm going with 311. There was a question to go take a look at ticker symbol DOCU, but the daily chart here for me is not working properly or well. Maybe if I turn this tool off, that will help. There we go. Turn that off. And so you want to take a look at this. If you're looking to buy this, you've got to wait. You know, nobody inside this equity is in a winning position. There's no winners out here. Price is trading below October 8th. That did 14 million shares. You're down with light volume, but right now it's trading below that low. By the way, that low specifically is 38.28. You're at 36.68 out here. I think you got to stay tight. If you're looking to get in this, you need to see a sign of strength. That means wide price spread, accelerated volume to the upside. Thanks so much for being here, folks. Stay tuned for your favorite polar bear, David White. If you're off to start your holidays, be safe out there, and we'll see you when we see you. Take care. We'll be back tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.